Hey guys, welcome back to the Watch Trading Academy channel. And today I'm going to share some pretty cool info with you and help you understand how to keep a watch collection that will diversify your whole trading assets as a diversified portfolio that will help you outperform any of your other investments, no matter what that is. And the best way to do this is really keep a repertoire of timepieces that are not only going to appreciate in value over a long period of time, but are going to make you money in the short term, and ones that you can swap in and out of to liquidate to make some money while you're doing this, whether you're doing it part-time or full-time. So what I like to do to keep a balanced portfolio with these watches as assets and pieces to enjoy is do something close to what I call the 80-20 rule. So not unlike any other investment portfolio, whether that's stocks, bonds, or other types of asset classes you trade, I like to have watches that will not only move instantly, but ones that I can enjoy for a long period of time that will either appreciate in the long-term play over years, or will make me a huge profit when I decide to let go of them and I find the right buyer for them. So in this little case here, I have a few different examples, and I like to do 80-20% of ones that I call quick flips or quick trades, and then ones that are more long holds. And some of the ones that are more quick trades, the quick flips, are these in-demand like steel and gold Rolexes. I have a Datejust 41 millimeter. I have a Rolex Daytona in Everose. I have a Rolex Milgauss in steel. And then I have a Panerai 631. It's a Panerai Luminor Marina. These four watches in this set, in this small tiny snippet of a portfolio I'm showing you, will move and sell relatively quick. And I'm in them well enough that when I need to make some money, I'll make a little bit of money on them, and everyone really likes these brands, they like these models, and they're not so overbearing in terms of price that you're gonna have a hard time finding a buyer for them. So those are the watches that I keep cycling through, that I take in, maybe hold for a week, maybe I hold it for a couple weeks, maybe I sell it in a day if it's something I really want to make money on quick. But these are always cycling while I'm carrying bigger pieces that are longer holds. So the 20% of my portfolio are pieces like this amazing Audemars Piguet Royal Oak Offshore chronograph. This is the 44 millimeter camo, which is very unique. They had a limited production run of this. Definitely for a specific buyer. This is not a piece that's necessarily a long-term lifetime hold value asset play, but it's what I call a long-term hold in terms of trading portfolio, because the margin on this one for me is going to be much greater when I sell it, but I'm probably going to have to hold this for 3 to 6 months to find the right buyer and again compete against the other options on the market. The other one that I have that's a long hold is this Cartier Calibre de Cartier in rose gold. And it's a phenomenal piece, it's beautiful, but not a lot of people have seen this out in the wild because they just don't know about Cartier having a big rose gold piece. And honestly, most people who are spending, 20 to 40K on a watch are probably gonna go and elect for what they know, which at least on the retail buyer side is something much more like this Everose Daytona. So by having this Cartier, I enjoy it as a daily watch that I wear. I command the respect and the interest and the attention of someone who has at least more than one watch, because I'm wearing a $44,000 rose gold Cartier. I didn't buy it for that price. You can understand what you should be paying for that at Watch Trading Academy. I paid much less, but it looks like I'm wearing a $44,000 watch, and I'll probably make $4,000 to $5,000 on this watch. But I understand that in order to trade this, I'm probably gonna need to sit on it for 6 months. So I don't wanna just be having watches that I'm going to be sitting on for 6 months and not be able to move anything. And at the same time, I don't want to only have ones that I'm cycling in and out of all the time when I'm only making, $500 on each trade. So if you balance out the watches that you're carrying as a portfolio and you look at it as an overarching strategy, you're going to be doing a lot better and making huge returns, and you're going to balance out the risk. So what's really cool, like I said, is if you're getting some of these ones cycling through, making new connections, making quick money, you can still enjoy and hold and be patient for the ones that are going to make you more margin. And if you balance that out, again, you can spread that out however you want, similar to any sort of investment portfolio. If you like things a little more aggressive, then play bigger margin pieces and try to market them. If you like things more conservative and you're more of a bond type smaller ROI but more steady, go with something like steel Rolexes that haven't gone down, and maybe you're paying a little more than you should for them, but you know that they won't necessarily fluctuate with a shitload of volatility. So I like the 80-20 rule, and again, I like to balance this out. This is just a small section of what I carry at any given point in time, but the point is, if you have this portfolio structured well, you're always getting money that's coming in flowing consistently to fuel your month-to-month profit, and then you can be patient and sit on the heavy hitters that are really gonna make you happy and be those home runs that make you a lot of money. And in the meantime, you can obviously enjoy them, have a good conversation. So I really hope that clarified a little bit about how to look at this from an overarching standpoint, almost like an asset manager, more than just someone who's trading one watch, buying one watch, selling one watch, and being like, oh, I just made $400, I just made $1,400, let me buy another watch, right? No matter if you're carrying 10 pieces, 100 pieces, whatever that is, start thinking about how this is being managed as a portfolio, and start thinking about what types of clients you have and what types of clients you want to start having in order to really crush it and make that money work and have that consistent cash flow no matter what type of market you're in, up or down. Enjoy, guys. I'll see you next time.